Zillow is saying that Nashville home prices are down 1.5% from their peak in 2022. So what happens to people who sold this year that bought in 2022? Are they down 1.5%? Did they lose money? I analyzed 38,237 home purchases. I found 191 that then sold in 2025. How many of those 191 homes do you think dropped? There are a lot of losers and there are a lot of winners. And if we look back and how they purchased, we might be able to get some insight in even today's market in ways that we might be able to protect ourselves. Now, let's just lay the groundwork for what's happening in Nashville right now. In Nashville right now, we can see that active listings are up almost 20% and 1,500 if you're buying. This should be great news for you. People are getting a little bit more nervous. We're closer to Thanksgiving, starting to see contract volume dip below. We have a much lower mortgage rate this year than last year. So the fact that it's lower and still lower is a little bit of a warning sign going into the holidays. Median price, even though it's very high, even though more people are spending more money, I should say the same amount of people are spending more money, it's not feeling as strong going into November and December close. Price cuts are actually dropping. So that to me says that the people that are buying houses that have cut their price. When we look at contracts, what we can see is the more expensive houses are the ones that are slowing down on their purchases now. And the ones that are cheaper actually are the ones that are kind of staying afloat. These are the mortgage rate sensitive, so it makes sense that they would be purchasing a little bit more or stable to last year. Now, according to Zillow, Nashville's housing market has been relatively stable since 2022. Yes, it peaked in August, according to Zillow, and it's now down about 0.5% from June of 2022. Here we are in September. It's 451,356. So the September value, which is the latest value they have, it's down about 1%. 1.5% from where it was in 2022. Now, what's interesting about this metric in particular is if you go to Redfin or even My Data or even Greater Nashville Realtors, what you'll see is that they're reporting that home values are up. In fact, they've been up. They're up majorly since October of 2022. If we go back to October of 22, we see home values were at $478,500. Today, they're at $515. Now, this is the median price. So where Zillow tries to normalize and take out noise, this tries to just figure out like, hey, let's take a list of everything that's sold. What's the one right in the middle? Okay, median price. Now, interestingly enough, we had the same number of transactions in October of 22 than we had today. In fact, we're within 7, right? That's like 0.1%. It's very, very tiny. The point is that we had the same number of transactions, and yet the median price is up about 10% from where it was in 2022. And it's up 5% year over year. So what is going on? Are prices going up? Is Zillow right that home values are going down? A lot of neighborhoods, values have been correcting while the people purchasing have been spending more. A lot of you have identified this as mix shift, where the luxury and the high-end units just keep selling and everyone else continues to struggle. And certainly that's a lot going on. But let's see if we can find some repeat sales that we can learn from. Of the 191 sales that I found repeat sales, which I think only represents about 25% of the repeat sales. But of the people that chose to sell, this isn't about cancel and expire. There are a lot of people that canceled their listings. 77% actually sold for a higher price than what they purchased for. Now, these are the same address. These are the same square footage. So there's a lot of repeat sales that aren't included in this, mainly because if you changed your square footage, you might have renovated. That would not be normal. I wanted to normalize this. I wanted to find repeat sales where you had the exact same address, exact same square footage, exact same unit number. So I would say this probably represents 20 to 30% of the repeat sales that happened. I wanted to know, why did these lose and why did these win? And what I found was that the majority of the winners had two things in common. The first one is not something you can necessarily help today. It's that they bought a new build and they bought it based on land that was purchased in 2020 and 2021. The most extreme example of this is when we go down to Ladd Park. So Ladd Park majorly struggled in 2023. In fact, values dropped in Ladd Park. This is a neighborhood in Franklin. They dropped almost 20% on the high end. Look at this peak, $444 a foot. Here's $400 a foot, down to a low of $338 a foot. That is a massive drop over 18 months. What happened here was that there was a neighborhood just down the road that was selling new builds that were nicer and bigger and which should be much more expensive for well below $300 a foot. These new builds absolutely destroyed Ladd Park. But what you can see is all the new builds ended up selling out through 24, and then what happened to prices? They all started going up above $300 a foot. And as they started appreciating, Ladd Park started appreciating. So the first lesson that I learned from the repeat sales are that new builds from land purchases in 2020 and 2021 still were trickling through in 2023, and they were putting a lot of pressure to the existing neighborhoods. That's starting to filter through, and I don't think that's as much of an advantage today. But the second one is absolutely an advantage today. What I want to do here is look at a home that actually lost a lot. And it's this one right here, 231 Croft Way. You can see it in 2022, it sold for $950. Today, or this year, it sold for $825. So let's look at 231 Croft Way. And here is the house. Let's see if I can. Okay, here's the house. Very nice. Even the architecture on the outside, all brick. It sold for $950 in April of 22, which I think was the peak. So let's take a look at all the 4-beds in this neighborhood. So what I'm going to do, I'm going to come back here. I'm going to go to my neighborhood tracker, and we're going to go to the 4 beds in that neighborhood. It's right here just outside of Mount Juliet. And here we can see, by the way, look at the inventory. Skyrock 17 active listings, and then it dropped off in November. Very common. I'm guessing those are new builds. But let's keep going. Okay, so here's all the transactions in the neighborhood. We're going to filter by total bedrooms because this was a 4-bedroom. This is going to blow your mind. And I want you to look at this chart and see if you can guess which 4-bedroom that sold in 2022, which would be this area right here, which 4-bedroom do you think lost value? And this isn't a trick question. It should be very obvious. But take a look at this chart and see, this is on a price per square foot. Let's go to sales price. That might be easier. Here's the sales price. Which one do you think might have lost value that was purchased in 2022? And I'll tell you, it's this one right here, 231 Croft Way. There it is, $950,000, $100,000 more than anything else that had sold in that neighborhood then and since. And it was just way, 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 way too much. I guarantee you they waived appraisal. Who knows what they did to get that house. Yeah, I don't have the data from 22, but you can see how tight the inventory was, even in 23 in that neighborhood. It's finally loosened up, which again is something else to pay attention to. That's 231 Croft Way. And where is it in 2025? I think it's right there, 231 Croft Way. Pretty wild. Now, what's interesting about this, before you say, well, it was market peak, anybody that bought there would have lost, there's actually another repeat sell in this same neighborhood. There's another 4-bed repeat sell in this neighborhood, except for they bought right here, 308 Croft Way. This purchase actually resold in 2025. They bought in November of 22 for $267 a foot at $680. Okay, well below a lot of the 4-beds in the neighborhood. And when they resold in 2025, they sold for $760 right here. So they ended up selling for $80,000 more than what they bought for in 2022. And why were they able to make money when this one was not? They bought low, they bought high. Y'all, that's the number one. That is the number one lesson. If there's any lesson that I can share with you all, it's that right there. If you are purchasing and you're worried about losing money, don't buy high. Don't be the outlier. Buy low in the neighborhood you're purchasing. You absolutely can. You do not have to buy top dollar in a neighborhood. You don't have to overpay for a house. There are plenty of options out there. There are plenty of ways to not overpay. And just by not purchasing the most expensive house in the neighborhood, you will set yourself up for opportunity to selling for more. If you take care of the house, you make it just a little bit nicer than how it was when you bought it, make it a nice home, you are much more likely to protect your home value and even gain appreciation over your neighbors. Maybe housing isn't an investment like it used to be, but you certainly can do things to protect yourself financially. And with that, thank you for watching. I hope you guys have a great rest of your day. Have a good weekend. I'll see you next Saturday.